Welcome to the first video in our four-part series explaining the differences between grandmothered and ACA-compliant small group plans and the premium impact on those groups moving to ACA-compliant plans. My name is Katrina Reyes, and I am the Compliance Manager at Claremont Insurance Services. In this video, you will see an overview of the 10 ACA mandated changes affecting all small group plans. Let's begin with a background on this topic. The Affordable Care Act, or ACA, established health insurance market reforms that all small group health plans must comply with on or after January 1, 2014. To avoid these market reforms, many small business groups opted to early renew their plans in 2013. In 2014, there was transition relief provided by the legislature. California Senate Bill 1446 allowed small business groups renewing July to December 2014 to remain on their plans for one additional year. However, because the carriers had already issued renewals for July to August, the carriers only allowed this for groups renewing September to December 2014. These transitional plans are commonly called grandmother plans. Groups on grandmother plans with any carrier will now only be offered ACA-compliant plans at their 2015 renewal. ACA-compliant plans may require changes in benefits, cost sharing, and rating methodology, which could potentially impact a group's premium. Let's now briefly go over the ACA mandated changes affecting all small group plans and the difference from grandmother plans. Let's start with the 10 essential health benefits. ACA-compliant plans are required to have the 10 essential health benefits set by statute. Grandmother plans are not required to have these 10 essential health benefits. Limit on annual out-of-pocket expenses. Grandmother plans have varying out-of-pocket limits that are determined by each carrier. ACA-compliant plans, however, have a limit on annual out-of-pocket expenses for essential health benefits that are set by statute. Minimum actuarial value, or AV. Grandmother plans can have AVs below 60%. ACA-compliant plans, on the other hand, must have an AV of at least 60%. Rating location. For some carriers, premiums for grandmother plans are based on the rating region where the employee resides. Carriers that base premiums on the rating region where the employee resides are Anthem, HealthNet, and CalChoice. Premiums for ACA-compliant plans effective or renewing in 2015 are required to be based on the rating region where the employer's principal business address is located. Rating regions. Premiums for grandmother plans are based on rates from 9 geographic rating regions, defined by each carrier. Premiums for ACA-compliant plans are based on rates from 19 geographic rating regions defined by statute. With few exceptions, areas or counties included in the 9 rating regions differ from the 19 rating regions. Risk adjustment factor. A group's premium for a grandmother plan may be subject to a risk adjustment factor, or RAF, assessed by the carrier. ACA-compliant plans, however, will not be subject to an RAF. Rating level and status tier. I will discuss these together. Premiums for grandmother plans are rated based on 4 tiers: employee only, employee and spouse, employee and child or children, and family, which includes the employee, spouse, child, or children. The premiums for the 4 tiers are rated based on the employee's age, meaning it's subscriber level rated. For ACA-compliant plans, the total premium is determined by summing the premiums of each enrollee, except where the subscriber's coverage includes more than 3 dependents under the age of 21, excluding the spouse. Then only the premiums for the 3 oldest dependents are included. The premium for each enrollee is based on their individual ages, according to the Health and Human Services, or HHS, default standard age curve. This means it's member level rated. Age bands. Premiums for grandmother plans are based on 7 age bands: under 30, 30 to 39, 40 to 49, 50 to 54, 55 to 59, 60 to 64, and 65 and over. For ACA-compliant plans, premiums are based on the HHS default standard age curve. These age bands are a single age band for enrollees ages 0 through 20, 1-year age bands for enrollees ages 21 through 63, and a single age band for enrollees ages 64 and older. Age rating ratio. For grandmother plans, there is no specific age rating ratio. For ACA-compliant plans, the ACA specifies the age rating ratio shall not vary by more than 3 to 1 starting at 21 years. This means the highest rate, which is ages 64 and older, can be no more than 3 times higher than the 21-year-old rate. That brings us to the end of the overview of the ACA mandated changes affecting all small group plans and the difference from grandmothered plans. Now that you are aware of the 10 ACA mandated changes at a high level, I encourage you to watch the other videos in this series that will expand on each of these factors and explain the premium impact to employers and employees. If you have small group clients moving into an ACA-compliant plan in Q4, make sure you educate your clients on how their benefits will change and the impact to their premiums. Start by developing a renewal proposal in current census, which only takes minutes with our quote-ready census service. Thank you.